Hello again traders, Andrew Curry here, welcome back to the channel. Today I've noticed a great setup on the Great British Pound Aussie dollar. If we can catch that setup, it could be a perfect trade setup, and I'm going to show you how in this video. Okay, so in this video, let's combine some of the things we've been looking at in recent videos. Okay, I'll put links in the description below to show some of the relevant videos if you want to look at more detail about those individual bits. Okay, but remember the framework I was discussing a few videos ago. Keep calm. Okay, so check what price is doing. Okay, so we've had this big strong bearish movement, and now we've hit a psychological level, which I've marked here with this line. Okay, the 2.05000. Okay, this is the Great British Pound Aussie dollar. We tend to find that when we hit psychological levels, us humans tend to react, and in the case of the markets, it's often a point at which the market will not push any further and may see a pushback, and that would be the counter trend trade we would be trading at this particular instance. Okay, the market has been making this big move. Okay, we've hit a psychological level, okay, and we've hit structure point. If we scroll back, look what happened most recent times that we hit this psychological level. Again, look at that. Big bearish movement, bang, hits the psychological level, reverse, okay. Try it again. Hit the psychological level, reverse, okay. You can take this a bit further, okay. So if we look on the daily, okay, so what's the Pound Aussie been doing, okay. So we'll try and just zoom out on all of this. Okay, so the Pound Aussie, okay, has been trading above this line since March 2025. Okay, but as you can see, prior to that, it was trading below that point, and it hit that point in 2020. Okay, so it's been, yeah. So if we look, the Pound Aussie has been trading below that point since February 2016. Okay, hit this level in 2020, rejected. So it's a structure level, a psychological level as well, but a structure level that has been hit and shown, given support and resistance from each side. Okay, a very strong level. Each side it hits tends to cause support and resistance. Okay, and as we can see, it finally broke through that level in March 2025. It's been trading above there since then, but when it hit this level again, pushback, and now it's going to hit again. We have good reason to believe further pushback. Okay, let's go back to the 4 hour again. So we checked what price is doing, assess the setup. Now we aren't just entering on this, hitting this psychological level, which would have been that green candle there. That would be very aggressive, okay? And there are times when you're very aggressive and you get lucky and you win and you think, oh, well, great, that's obviously the way forward. No, you got lucky. Being an aggressive trader will get you some, quick wins, but will also get you a lot of losers, okay? So instead of being really aggressive, what we want to look for, which hasn't started forming yet, we want to look for a double bottom. And I've been discussing my rules for double tops, double bottoms in previous videos, okay? So what we want to see is it pull away from this section, okay, and then retest again. We have two tests with white space in between, okay, and the white space in between is key. We've pulled away from this point, then return to it, and the same thing has happened, okay. So if we get that double bottom, that would be a good point to say, okay, we've had some good indicators, we have good repeated indicators here, in the sense that we've had a test and another test. Okay, so now we want to play for the subsequent reversal, right? So then, having assessed the situation, got a double bottom hopefully, we then lay out our trade, okay? So we want an ATR stop loss, okay, which I've been discussing recently, okay? Our low would be 2.04949, take away, right, 0.00642. Okay, 2.04307. Okay, so assuming we enter on the close of the candle, which happens to be that line, that would be our entry. We then have an ATR stop loss. Okay, so what about a target? Okay, well, if we're playing for this move here, The first danger zone where we may see the bullish momentum stop, or at least, start to wobble a little bit, would be expected to be there. Okay, and interestingly enough, this move here was almost an unbroken run of lower low, lower close, strong bearish candles, except when it hit this structure, roughly here. You see the green candle. So what we want to do is not push our luck, okay? We want to say, okay, the close of that candle there will be, okay, so if that trade comes to fruition, it may not give us a double bottom, but if it does, okay, let's do this properly. Let's have a look, assess the trade. Okay, that would give us a 1.74 risk reward ratio. That's very good. Okay, and if we did win, assuming that's the thing, we'd be looking at, 121 pips. A very good trade potentially, okay? But as we all know, easier said than done. The final part of the calm framework is to manage yourself throughout. Manage the trade, manage your emotions. And for a lot of traders, myself included, I find it helps to simply set and forget. Once we set this trade, we have our target, our stop, we set it, we forget about it, we simply come later and see what happens.